are in listen-only mode.
Hey everybody, Preston Brent here with our trader user group weekly roundup. This is for the trading week ending August 4th, 2017. What I've got on the screen here is the weekly chart of the E-mini S&P 500 futures. And as you can see, we've been in this bull market now for about 9 years. And you can see we've had a really strong stretch from the beginning, or actually February of 2016. We pulled back more than 12 to 15% in the S&P. The beginning of 2016, going through the second week in February, and the Russell, we actually went into a bear market. It wasn't a correction, it was a bear market for just a brief period of time. But then since then, we've made it a very strong move higher, and you can see the upward vector in this channel. And this really comes on the heels of expected corporate growth and earnings, which we've seen in Q1. It was over 15%. Q2, it was double digit. Looks like it's going to come in about 11%, maybe a little bit more than that. We've had very low interest rates. We've had low inflation, which is a head scratcher for central banks, especially Aunt B, aka we call her Janet Yellen. It's going to be real interesting to see how all of this plays out. We've got a key central bank meeting coming up in September. The markets are not really forecasting an interest rate hike. It's below a 50% chance, although we had the job numbers come out this past Friday. They were over 209,000. Upward revisions in prior quarter, as well as unemployment falling to 4.3%, which is, again, part of the head scratcher as to why inflation is as low as it is. But if you look at the commodity market with suppressed commodities, primarily oil, is keeping a lid on some of this, and we've got these low interest rates in the bond market. It's going to be real interesting to see where the markets wind up in the second half of this year. We have not had, for the entire first half of this year, there have only been 4 trading days where the markets have closed up or down more than 1% in the E-mini S&P 500 futures. Just 4. That is 3% of the time, the trading days in the first half of the year. Now, the average is 24%. So we're running 8 times less than the average, 8 times, which is why volatility is still extremely low. It closed at 10.03 today. Now that's higher from where it's been because it was sub 10. It was 9, and in fact we went down into sub 9 into the high 8s for a day or so, but still very, very low. But you can see this upward strong trajectory here in the upward vector. In fact, the lower boundary of this channel is we're maintaining this vector. But I would believe, looking at the charts, I think we're going to get a little bit stale here. I think after the earnings in the next couple of weeks, you're going to see some profit taking. Keep in mind that July historically has not been a very kind time to the markets. July and August, going back the past couple of decades. August sometimes can be even worse, and we're just right at the beginning of August. As earnings come through and then we wait for the Feds in September, I think there's going to be some profit taking. You can see over on the left-hand side of the screen, these blue bars represent volume over price. And I've got an area here around 2360 where we've got a lot of volume. And then all the way down to this 2017 open price of around 2256, 2260. I believe we're not going to get more than a correction. A correction is 10%. Anything less than that is a pullback, and I've kind of defined a dip as anything less than 5%, and I think that's what we're going to see, anywhere from 2 to 4%, maybe 5%. Remember, if we pull back to the 2400 level, which is a good psychological barrier for the E-mini S&P 500 futures, that's about a 2.8% pullback. So I think we could go a little bit more than that, August, September timeframe, and wouldn't surprise me at all. Now that would change the upward vector and skew it a little bit more so that the angle of ascent is not as great. I just don't think we're going to maintain that. And then we've got the only thing that can really put this market into a correction mode, which is greater than a 10% pullback, will be the central banks, or some kind of fiscal policy from the government, or a geopolitical event like something in North Korea or over in Syria or in the Middle East somewhere. Outside of that, I think most of the market is going to be in a dip mode, buy the dip mode. That's kind of what I've had our members talking about for the entire time. Okay. So that's kind of where I'm looking at this in the markets. It's not any more complicated than that at this point in time. You can see over on the left-hand side of the screen, we got about 14 trades that we're running. We've run more than those, or a little bit less, but we're taking profits. We're having a successful time in our secret trader. We got a lot of folks that are coming in internationally, which is cool. Got a lot of folks in the North American market also playing with us as well. But you can see volatility is closed out the week at 10.03, so it's fairly low. And you just have to be careful. You want to be looking at long vol types of plays here. Okay, so this is at a very brief summary what I'm looking at for the markets. Strong upward vector, solid corporate earnings. We've grown not only top line number, which is very hard to engineer. It's impossible. You either have sales or you don't. Or bottom line number, which you can engineer a little bit, but we've grown both top and bottom line numbers. So we're seeing that come through in the equity price. The thing that really had an ugly day today after the jobs report came out was bonds. If we come down here and take a look at the bond market, the bonds pull back a pretty good little bit. And just looking at the bond market right now on this weekly chart, and I'm going to go back to a daily, but you can see, and the weekly shows it even more, and this goes all the way back to 2015. Look at all this volume over price right here. This is a big fight in the bond market, right at the price where we're at right now. Do we go higher? Do we go lower? And you can see this huge, massive amount of buying and selling going on right in this area here. And that's why I've got this shaded zone here, which is kind of where we're sitting. And then I got a wider, or I've got a support zone just below that, which was our 2017 low, right? And then if we go below that, we're going to fall down a pretty good little bit. But right now, the bond market, it really is a coin toss, because if we get that little bit of a dip, anywhere from a 2 to a 4 or 5% pullback in the markets in August going into the September central bank meeting, then you're going to see the bond market move higher. And if it does, I'm going to be an active short seller in the bond market. Right now, it's kind of some days it's up, some days it's down. So it depends on how I want to play it. Right now, though, it's a neutral kind of category for me. I think longer term bonds, clearly you want to be short the bond market. Near term, if we have a little bit of a dip, I think you'll get a better price if you wait, let bonds pull up a little bit. So that's kind of what I'm looking at. And the dollar, the dollar has just fooled a lot of folks. And if you look at this chart right here, this right here at the peak was at the beginning of 2017, and then the dollar has given it all back up again, and we're back down near the lows that we made back in 2016. And you can see this 2016 low price that I've got on the chart here. If we take it back to a daily, all right, just to show you the vector of this move to the downside. Look at this. We're staying in this channel, and we actually broke through, and now we're going to come up and probably test the lower boundary of this channel. We may break back inside because there's so many shorts in this trade. You'll see a little bit of a short squeeze, but I would not chase this. Just taking some near-term swing trades, being long the dollar makes sense to me, because you're going to get that really violent move to the upside, and then the charts would say it's going to roll back over again. And yeah, let me just get my sub chart back up here again. You can see over here in the MACD that there is no divergences at all. In fact, this would suggest any move higher should probably be sold short. And then, of course, the contra to this is the euro, because if you look at the euro, it is making new highs this year. And we were up to 119 in the euro. Now, when the euro is down around 104, I said it's probably going to go to 115, 114 to 115. Close, but I missed it. I didn't think I would undershoot that. I didn't think the market would overshoot my price, but it did, and it went all the way up here. And as again, the MACDs and the indicators here suggest any move lower, you're going to want to be a buyer on the dip here. So and the only thing that can change this divergence between the euro and the dollar is going to be the central banks, Draghi or Yellen. And this is going to start to weigh on Draghi's decisions and what he's got to do. It's going to be very difficult. It's going to make it harder for him with his upcoming central bank meetings in the next month or so to see, because they've got a big meeting in September along with the central bank here in the U.S. as to what's going to be their official policy and how do they want to react to it. So that's a little bit about these two markets that I find very interesting. And then, of course, these things are also driving the gold market. Gold, as I said last week, is just in a wide range right now. If you look at this chart here, 1300 to 1200 is where gold is. There is no inflation. And even with a weak dollar, gold has moved up a little bit, going back just a month. The month of July has been a very strong month for gold because it came down to this area that I said it's going to find support in, which is the 1200 area. Once it gets up here, you want to, buyers or sellers are stepping in just to pull it back down again. So we're in this very wide range. To me, it's mostly swing trading here. Longer term, I think if inflation catches wind, you're going to see the bond market tank. That's going to drive the equity markets lower, not higher. You're going to see that correlation because bonds have been moving up with equities, and it's what's going to be interesting is when bonds start to sell off, you're going to see the equity market sell off too, and then you're going to see gold bust a move through 1300 and head up to 1350, 1400, maybe even higher. So now is not the time, but I think there's going to be a good time for the gold market. And if we look at oil, our other one, I told you earlier, we've done 14 trades in a row, and we've got the 15th one on. It's already in nice profits. I think we're going to, work out that one as well. And even with these wide swings here, we've done well with what the oil environment is giving us. Okay, so you can see here with this move lower highs, lower lows. Does that mean oil is going to come down to the 2017 low of 42.05? I don't know. But with the strategies that we're deploying in the oil futures market, for us, it doesn't really matter as much if oil comes down here or not, because we've been successful with oil going up and with oil going down, and sometimes violently. And we just take the trade and we pull our money out. That's the environment it's given us now. So, and that's for those of you that are in our secret trader. We're having a lot of fun with this. So, but oil broke through the downsloping channel, but then the very next day it did what is very common, which is do a retest of that channel, and it came back inside the channel or below the channel. So it negated that breakout. So now you can see over the past 2 days, it's just riding this channel, doing its darndest to try and break out of the channel right here, and it's having a hard time. Okay, should it break out, then you're going to see some open field running if it takes out this little prior near-term pivot high, and it's going to run up to this previous bigger pivot high right here around 51.75, 52. If it passes through here, you can expect a retest of here, but if it passes through with flying colors and moves higher, then I think oil will move up into the mid 50s, but I don't think it'll go much higher than that near term. All right, so that's kind of what I'm looking at for oil. Now remember, July and August tends to be a stronger time for the oil market and a weaker time for nat gas. Nat gas really isn't doing anything right now, so we're not really playing with it. All right, everybody, that was a real quick recap for where we are with our markets. For our members of our group, I will see you this Sunday night. We're going to go through where the markets are and some of the opportunities we have, and we'll go through our secret trader trades. If you're not a member of our group, I highly encourage you to come in. Getting a lot of folks international as well as in the North American and U.S. markets also. So we're having a good year, and I expect the second half of the year is going to offer up some really interesting surprises, of which we're going to want to take advantage of. Other than that, folks, see our members. I will see you guys Sunday night at 8 p.m. Otherwise, for everybody else, make it a great weekend. Ciao, folks.